shifting focus to a couple of other managements then, and we have Mamata Machinery, the CEO of the company, Apurva and Kane. He's now joining us. Thank you for taking your time out and joining us here on ET Now, Mr. Kane. First up, let's talk about the new development that has happened. The company has now received the patented way of using its Quadra 600 machine to manufacture 4 small BOPP bags simultaneously from one film web. If you can take us through what this means, and for the benefit of our viewers, can you help us understand what this really means for the company and the technology as well?
Good morning. Thank you for having me here. Yes, this is one of the latest patents that Mamata has received. There have been series of patents that we have received. So we are not only equipment manufacturing company, but we are also a solutions provider to the industry, and this is part of that journey. This particular patent actually helps converters convert BOPP film into small bags, which are like, say, 50 millimeter by 75 millimeter kind of bags at very high rate of production and at extremely high efficiencies. So this patent actually is able to stack those bags on 4-up basis at extremely high speeds. I'm talking about speeds that are nearer to about 400 cycles a minute. So then machine ends up manufacturing and stacking 1,200 bags a minute. So that is what we are doing. Currently, this process for converters is extremely tedious, and this patent and introduction of this technology will help converting industry for this very niche market. Some of the other patents that I can talk about is the recent patent that we filed for enabling technology for our RecTech film. And this particular patent is for die and screw technology that enables extra ultra thin EVOH layer in a 9-layer co-extruded film. RecTech is a film that is designed actually to replace non-recyclable films that are in vogue currently, and it could be transformative for the industry in future.
Okay, and Mr. Kane, can you quantify what kind of production efficiency will you enjoy as a result of this, and how will cost reduce for you?
The cost doesn't reduce for us. The cost reduces for the converter, the people who use this machine. So basically, in terms of currently, the machines that are being used without this technology require about 3 people to handle the output. We are able to bring it down to just 1 person handling the output of 1,200 bags a minute. So there is a payback on this technology that is lower than 1 year.
Okay, and let's also talk about your order book position. If you can take us through where does it stand currently, and what kind of revenue visibility do you have for the next few quarters?
We have already given a guidance that this year our revenue is likely to grow between 15 and 20%, and the guidance remains the same. There is no change in that particular guidance.
15 to 20% revenue growth guidance continues to remain intact. And what about the domestic packaging business? Is this segment likely to aid growth? I believe you have given 30 to 40% growth guidance for this segment as well. Other than the domestic packaging segment, which other segment will drive this 15 to 20% growth?
Our growth engine for Mamata is introduction of packaging machines in India. So we are expanding this portfolio within India, and we are on track to that 30 to 40% growth, which is similar to previous year in domestic market. But the majority of growth is likely to also come from introduction of packaging machines in Europe, in Far East, and Africa. So that is from where we are now finding that the traction is coming our way, and that is what will actually result in achieving the guidance that we have provided to the markets.
And I believe you're also expanding to other markets in order to reduce your dependence from the US. If you can take us through what kind of impact has US seen in the last 1 year, any impact in Middle East operations now?
Um, as of now, Middle East, because we can't ship machines to Middle East, we don't have much of a business from Middle East. As far as US is concerned, our converting equipment has started coming back in terms of business. Packaging machinery business in USA is still lagging, but we do have a pipeline, and we hope that with Pack Expo that is coming up by end of September, we might be able to do better.
And what about EBITDA margins? Because I believe you have given 20% guidance. I think in FY26 it was just at about 6 or 7%. What will drive this kind of margin expansion in FY27?
See, most of our expenses are semi-variable in nature. So after a certain level, once we start contributing to the top line, there is a direct conversion and impact on the bottom line in a positive manner. Same thing happens if the top line drops even in a small way, the bottom line also falls, which is little bit disproportionate to the top line rise or top line shrinking. Since we are talking about a 15-20% growth guidance for FY27, that will result in normalization of EBITDA to previous years.
What is the cash balance currently? Because at the end of the last year, last fiscal FY26, the cash balance stood at about 70 odd crores. What is it currently, and what will the utilization strategy be? Because I think you're a debt-free company already. What will this excess cash be used for?
The excess cash levels normally build up by end of the year, and then during the year, some of that cash is used as part of our working capital. So we are right now at working capital usage, and I think our cash on hand is currently around 65 CR. Having said that, the new RecTech technology that we are introducing to the market, that is one area where we might be using capital. Plus, we are proposing expansion of our production facility here in our present location. So we might be putting up a new building that's dedicated to packaging. It is under approval of the local authorities from planning point of perspective. And if that comes in, some of that cash will be used for expansion of our production facility also.
Capital expenditure be? Can you put some number into perspective for us?
The new building is likely to be, and extension of existing building is likely to be in the region of about 16 crores.
Okay, so 16 crore, that's the capital expenditure. And you did talk about FY27, 15 to 20% revenue growth. But now that you're expanding into other geographies, West Asia related conflict is also behind us. You've also reduced your exposure from US. For FY28, any kind of visibility that you can share with us with respect to revenue growth or order inflows that you're expecting?
It would be difficult to say what exactly will happen 18 months down the road. But what I can tell you is that we have the products and we have the markets. So when you sum up product plus market situation, it can only result in something that leads to growth. And therefore, we continue to think that at least packaging will continue to be the growth story for Mamata, and we should grow in packaging by about 30 to 40%.
Okay, so that's as far as the outlook for the next few quarters is concerned. Mr. Kane, thank you so much for taking your time out and joining us here on ET Now.
Thank you so much.